and welcome to Cafe Mutual YouTube channel. Friends, while the markets have been performing well, markets across capitalization have been very volatile over the last 1 year. In such a scenario, many MFDs want to understand that how they should deal with the incremental inflows. To answer this pertinent question, we have with us Mr. Shailesh Bhan, Deputy CIO Nippon India Mutual Fund. Shailesh has over 2 decades of experience in fund management and wealth creation. Welcome, Shailesh.
Thank you. Thank you for having me.
So, Shailesh, my first question to you is that considering the state of economic activities and corporate India, how comfortable are you with the valuations across market caps? Do you see chances of correction going forward?
Interestingly, post-COVID, the market re-rating has been fairly substantial. And you have seen both large and mid-cap and even small-cap valuations in a similar range. Earlier in 2017 and all, you would find that small and mid-cap valuations were way higher than large-cap valuations at that point of time when there was a correction later on in that particular space. But today, generally, valuations are broadly in line. There's no significant premium for one category versus the other. And on an overall market valuation basis, yes, markets don't appear as cheap as before, but I think the earning opportunity for India or the earning opportunity for the large corporates, mid corporates in India in the next few years is actually ahead of us, because India had a very low base of earnings in the last decade because of all our problems. I think all the energies unleashed by reforms and things which have been implemented in the last 3-4 years and the policy framework which we have in place, so are all earning opportunities in front of us. So large, mid, as well as small cap companies will benefit in this journey. And maybe given the current environment where there is some raw material pressure, maybe the large caps will benefit a little faster versus where the mid and small cap companies can be. But directionally, I think broader earning growth should actually benefit the whole space very well over the next 3 to 5 years.
But Shailesh, what could derail the market, especially the mid and small cap segments?
Normally, we have seen that the mid and small cap segments suffer significantly when macro conditions are not good. So when you have significant inflationary pressures, one such condition does exist today. When you have significant inflationary pressures which they are unable to pass on, right, impacts their profitability for that period of 4 or 5 quarters when this kind of stress is continuing. So that is one phase where macro conditions generally are not in your favor because of very sharp rise in prices, or there is a sharp tail off in demand. I think today we are seeing definitely pressure on the commodity side, which could be one risk for the mid and small cap space, while large cap will handle this pressures much better than that. So I think this is one risk which should be there at the top of investors' mind for maybe a few quarters from here. And if we are able to navigate this well, I think we have a meaningful earning opportunity in India in the next 3 to 5 years.
Great. So Shailesh, Nippon India Multi-Cap Fund is a 17-year-old fund, and it has been outperforming since years, and it has recently outperformed this benchmark by a huge margin. So what are the 3 things that has contributed to this performance?
The product itself has a long history. So, at all points of time, we take focused, high conviction ideas and invest ahead of time and, work towards it. So we were invested in a lot of the cyclical businesses which are doing well today, invested about 2 or 3 years back before this whole cycle started itself, because valuations were too much in our favor. So that high conviction investing style in engineering companies, in capital goods companies, in hotels as a sector, in large banks and unfavored companies has benefited the fund from the last 3-year kind of a horizon point of view. Our structure is always to see where you have the maximum risk reward from a valuation point of view, where is that gap available, and whether the business is sustainable and profitable from a 3 or 5 year horizon. So once you get this kind of an opportunity, we position ourselves in those areas to capture returns. So the fund approach has always been to high conviction investing, buy in sustainable, profitable growth businesses, and buy them at reasonable prices and not end up overpaying for growth. So when you do these 3 things together, over a period of time, you start improving the quality of the portfolio at a very, very low cost. So that allows you to do well over a period of time.
Shailesh, multi-cap funds by structure are very similar to flexi-cap funds and ELSs. So, what additional benefits can investors get by investing in multi-cap funds that are not possible through flexi-cap funds and ELSs?
Yeah. The multi-cap funds have a very, very simple structure. At all points of time, minimum 25% is invested in mid, small, and large cap space. And the balance 25% gets distributed where there is effectively far greater value or far greater risk reward in favor of investors. So in this, you are not missing out on any category at any point of time where you are. And secondly, you are adding on to where you find far greater value or much greater position. Comparable other products like in FlexiCap also have the ability to move across market caps, but generally it would involve that they can also work with much lesser exposure to small and mid caps, right? And we have seen that it is not very easy for people to switch on and off in terms of their mid and small cap exposures, because generally you have to buy them with a 3-year, 5-year, 7-year horizon to really capture the returns which come about in this kind of a market. So our emphasis is you always have participation. If you want a single product which offers participation across 3 spaces from a medium-term point of view, you have the multi-cap opportunity in front of you straightforward. If you want a diversified product which depends on taking market timing calls on different categories, that is a flexi-cap product which is available. So multi-cap in some sense reflects the market structure and more.
Great. So Shailesh, moving on, the fund has high exposure to financial services and capital goods sector. So why are you bullish on these sectors?
Financial services is the largest sector in India, and it is possibly the sector which is best positioned to capture the recovery in the Indian economy, which is underway, and the whole investment cycle which we are talking about. All growth recovery requires capital for growth, and some of the large businesses in India have that ability to finance the growth in India by through lending. Second, financial services also significantly underpenetrated. Third, the valuations in this space are also relatively much better than many other sectors in the market which are outpriced. So if you put into this context and see the growth opportunity, the profitability, and the credit profile of these businesses is very good, which allows us to participate in the broader economic recovery as well, and hence it's an important space to be in, and hence we have a participation there which is large. Coming to capital goods and engineering, I think India is at a cusp of an investment cycle coming after a decade. I think this opportunity can even last for 5 years, 7 years, because all these investment cycles are generally a medium-term horizon, 3-year, 5-year, 7-year cycles. And I think if you are focused on that particular space, there is a possibility that earnings growth in this sector can be even double the earnings growth of what index can offer for a period of time, because the base is low and all the investment cycle is just starting to happen. So to put this in context, this is a sector which is attractive from a medium-term point of view and hence carries a large overweight in the fund.
So Shailesh, one last question. What makes Nippon India Mutual Multi-Cap Fund different from other multi-cap funds?
I think the approach for this fund has been simple from day one. Focus on the right set of businesses, hold them for a medium-term horizon, have a conviction in terms of supported by deep research to be able to capture the whole cycle for those kinds of businesses, and not overpay for growth. So, you are kind of not doing any speculative activity or not overpaying for growth, but following an investment framework consistently over the years. And given that it has has an operating history across cycles, we have seen through maybe many cycles in the last 17, 18 years in this particular product. The maneuverability also has been managed at all, at all waves of the cycle, whether it is a high growth phase or a medium or low growth phase, or whether it is a high inflation phase, or whether it is a low inflationary phase, right? So I think it's seen all cycles, it's seen all seasons, and it has demonstrated over cycles that when there are opportunities to be captured, I think the fund is well positioned to do that. And the portfolio construct also looks at the next 3 years and 5 years always as an investment horizon. And if you get those cycles right, I think it's a positive for the product. So that's how we approach investing in it, and hence I think that provides an opportunity. If somebody is looking at a 3 or 5 year horizon to capture India growth opportunity, this is one investment product which takes that kind of a stand.
Thank you so much, Shailesh. You have rightly pointed out that Nippon India Multi-Cap Fund is an all-season fund, and distributors should consider it in every client's portfolio. Thank you so much, Shailesh, once again.
Thank you very much, and thank you for your time.
I thank each one of you for being such a wonderful audience. Have a great day at work, friends. Bye.